Hello and welcome to Trading 5 Talents. In this video, I wanted to go over a recap of something very interesting that I took part in yesterday. So Tradier held their Fall Options Summit yesterday, November 15th, 2023. And if you don't know that, Tradier is a broker that I've been using since going over to Option Alpha and using the automated trading bots. So they held their virtual options summit yesterday, and the main theme of the summit was the emerging options trader. And they had their whole agenda listed out here, and I'll leave a link to the replay of this entire option summit if you want to take a look at it. I'll leave the YouTube link down in the description, but I just wanted to highlight this section right here. It's called A Day in the Life of an Active Trader. So in this session, the host is interviewing a handful of just everyday options traders, and I happen to be chosen as one of those traders on the panel. So I got permission from Tradier to repost this section of the Options Summit for you to enjoy and for you to take a look at. So again, that session will be replayed in this video, but if you want to watch the whole summit, then the link is down in the description.
So our next adventure is the panel number 1. This is a day in the life of an active trader. So we've never done this before, but we have some real life active traders. So these aren't actors. They're not partners of ours necessarily. These are actual retail trading folks who may or may not do this for a living. We're going to find out. So we're going to ask some questions of the active trader group and try to get down to the bottom of what these people look at and think about as active traders. So not sure how we're going to introduce people, but Kayla, do your thing here. Are we going one by one? Look at that. Hi, John. How are you? John, you there? Oh,
yeah, I'm here. Can you hear me?
I can hear you now. So we're going to use just first names, if that's okay.
Okay.
I guess for privacy matters. So you're going to just be John today. Is that okay?
That's okay.
All right. So John, we're gonna introduce each one of us, each one of the active traders separately. So you're on first, it looks like. So just give us a brief bio of yourself and tell us a little bit about, John.
Okay. Well, I'm a 77-year-old retired physician who started trading in early 2013.
Mm-hmm.
I quit for a couple of years in the middle there, 2017-18 timeframe, because of family issues, back to trading. And like with the statistics earlier described, I've been trading much more this year than in previous years.
Mm-hmm.
Like the two previous speakers, I prefer selling options. So my favorite strategy is probably credit spreads.
Okay.
And under the right circumstances, I'll do a couple of those and turn it into an iron condor.
Perfect. Okay. Good. All right, John. Good. Let's bring on number 2. Gordon, you're up. Hi, Gordon. How are you? Nice to meet you. Gordon, can you hear me?
Okay.
Gordon?
Hey, I'm here. Yes,
I'm
I'm here.
How are you,
hear
Gordon?
me?
Tell us a little bit about yourself.
Do you hear me?
Yeah, we can hear you. Can you hear us
I
okay,
wonder why
Gordon?
it's not. Okay, now you can hear me. Okay. I am also retired. I started this. I hear you fine. Okay.
Yep. Go ahead.
Okay. I started trading about 8 years ago when I retired from petroleum refining. I designed and worked from the East Coast, the West Coast, Northern Rockies to the Gulf Coast. And I wanted something that would keep me busy in my retirement other than playing golf. I took up trading.
Perfect. All right. Very good. Very good. All right. Let's meet Donna. Hi, Donna. How are you?
Hi, I'm fine. Thank you.
Tell us a little bit about yourself, if you don't mind.
So I'm also retired, living up in Anchorage, Alaska. I came up here to be with grandkids and my son too, but mainly the grandkids.
Okay.
And I started the trading education in 2018 and have been trading on and off since 2019.
Okay.
Had some family stuff going on, so it's been interrupted a few times.
Okay.
And I also like selling premium predominantly. I do some call options occasionally. I do well on them for a little while, and then I get burned badly. I do like selling credit spreads and iron condors if it makes sense.
Okay.
So
we'll dive in that in a second. I'm seeing a pattern here with retires. Okay, let's see if Linda is the same way. Linda, nice to meet you. Tell us a little bit about yourself.
Thank you. Nice to meet you too. Yes, I'll join the retirement group. It's a great way to spend retirement, don't you think?
yeah.
Awesome.
Yeah, I retired from financial services. I've been trading for about 4 years. Donna, I think your style and mine is probably pretty similar. Although I have been starting to trade futures and enjoying adding that to my I guess suite of things that I do.
Okay, terrific. And next we have Tim. Hi, Tim.
Hi, Lex. Can you hear me?
I can hear you just fine. How are you? Are you going to add to the retirement party too, or what?
Well, let me tell you, I retired at a very young age.
There you go.
Just before the financial crisis, the global financial crisis, and which is when I started trading right after that. So it's been about 15 years, and I've traded just about everything under the sun, except for cryptocurrency. But I really have focused on option spread trading.
Okay.
And well, double calendars. I used to trade a lot too, but not anymore. So anyways, I've been doing this for quite a while, and it's pretty much been a full-time endeavor for me.
Okay.
So I know you just want a brief intro, so I'll just leave it at that. But my background is in finance and management consulting and one of the big accounting firms. So, yep, that's all I got right now. Thank you.
Great. You bet. And Dick, I think you're last. My gosh, there's so many people in here. This is unreal. How are you? Oh, I don't think we can hear Dick right now. Let's see. Is he? Do you? We're not hearing you, Dick. Do you have a mic issue? Who can read lips? Anyone? I can't read his lips.
He's muted.
No, he's not muted. We'll go to Dick. While you're figuring it out, we'll go to Santiago. Hi, Santiago. How are you?
Good. How are you? Hello, fellow traders. So I am not retired. Sorry, I broke the chain. Yeah, I am I'm a full-time microbiologist, and I'm a part-time trader. I started getting into trading probably back in 2018. I was introduced to it by my brother-in-law, and I've been doing it on and off. And like many of these other traders here and the previous two speakers, I mainly focus on selling options premiums.
Okay, good. Awesome. I think that's everyone. I think, Kayla. So if you don't put someone else out here, then I know it's everyone. I'm counting. I think there's 8 of us. Okay. All right, great. So here's what we're going to do. We're going to ask some questions and learn more about what the active trader mindset is, let's say, the style, that sort of things. A lot of you have already mentioned that you like to sell premium. That's very interesting. I like those answers. I was also a premium seller in my life when I was a professional trader down on the floor. But they call me like a Lexosaurus Rex now because they don't believe people actually were down on the trading floor at any time. But I was. So we also sold premium. It's a very professional style of doing things with options, I'd say. So we want to learn a little bit more about the active trader. Okay. And I'll just kind of snake around a little bit. If you want to just raise a hand or something, you can do that as well. First question, though, is, we keep tossing this word around active trader. What do you think that means? To me, I know what it means. An active trader is you do it for a living, right? That might not be what it means to you folks, especially the retired group here. So Santiago, I think I'll start with you first. What is it? What is an active trader? What does that mean to you?
Well, I guess to me, it's just going to mean something that you do consistently and on a schedule. I don't think it has to necessarily be every day, just personal experience, but just being in the markets, paying attention to the markets, opening, closing trades, maybe once a week, maybe a couple times a week. I think it just really depends on the strategy that traders are looking for. Some people really like that activity. And some people really just want to have the freedom of location and time and just trade once a week, once a month, and set something up for a long period of time. I think I would still consider them an active trader because they're not doing it.
Right. Okay, good. Don, I'll go to you next if that's okay. Active trader, how do you define that in your view?
Right along the lines of Santiago. I don't day trade. I have been in some day trades because they've gone the wrong way or the right way really fast, but I tend to be involved in the market every day, looking at it and trying to decide what I'm going to do. But I don't have to trade every single day. I think not taking a trade is as important as taking a trade.
Words to live by. Very good. I say that a lot. Excellent. John, any thoughts on active trader?
Well, I agree with both. I don't think the frequency of trading is important. I think an active trader is somebody who takes trading seriously, so is likely to have a trading plan. Um, a lot, it's frequently said, plan the trade and then trade the plan. And I think that active traders need to do that if they want to be successful. That being more important than the frequency of trades.
Okay.
I like Donna. I look at the market every trading day. I specifically don't trade every single day because I think it's number one rule is to protect your assets, and number two is control risk, and then the rest is work the plan.
Okay, good enough. Linda, do you have you want to add some thoughts to this?
Well, I do trade every day. In fact, I mentioned that I'm starting to trade futures, and with regard to the futures markets, I do day trade. I like I have to admit, it's a little exciting, right? It's fun. It's fun to make the trade, and hopefully it goes in your direction. John, I love what you said about, about having a plan. That's something I could do a little better with, is having a plan for my trades. But I do like it. I also do like to swing trade, though, because I think it might have been Tim, but maybe not. Somebody here mentioned they like to golf. I like to golf too. And so I do like the freedom that swing trading provides, that you can be, in front of your computer for a little while and then get out and do other things.
Yep. Okay, good. Tim, you want to go next?
Sure. I like to golf too. So, I think it depends on what type of trader you are. Actually, I don't like that term, active trader. That denotes to me a frequency, a volume of trades. And
sure,
I think that's a bad way of going at trading if you want to be successful long term. So I like to look at it as, are you a professional or are you a gambler? And what I do now is I am a day trader, but I trade primarily not directional. I trade spreads on a daily basis, so credit spreads. So that's primarily what I do now, and I am active in the market most days. I'm not trading 6.5 hours a day usually.
Okay.
Try not to trade that much, but I do trade quite a bit, at least a couple hours most days. So
okay, perfect. Okay, and then Dick, is your sound back?
I think so. Can
you
hear me now?
We're in business. Very good. Nice to meet you.
Thank you. Thanks for having me. Sorry about the sound issue.
That's okay.
So just real quick introduction. I left corporate America mid-16. I have 2 young boys I wanted to spend more time with. Been trading full-time since, I guess, mid-17. So retired, no, because I'm a full-time trader. It's how I make my living.
Okay. Great. Yeah. So you're more active then.
So I mean, I'm kind of like Tim. I don't feel at all the need to ever make a trade if it fits my plan.
Yep.
I'll take the trade. I'd say I'm probably 85% mechanical and 15% discretionary. But I do not feel the need. I'm sitting in front of my computer, and if it's noon, I haven't made a trade. Nothing's set up.
Okay. Love it. Okay, good. So speaking of that, let's change over to here. Let me just set this up, this next question. So what I'm going to ask about is what's your trade idea generator? Okay. And what I mean by that is, how do you decide to make a trade? Now, the reason this I think is important is, from my perspective, we didn't have that from the professional world. We responded to markets, and we bought on bids and sold on offers. That's what market makers did. So we didn't have a trade idea generator. It didn't exist. When you look at a screen, okay, and you look at all these markets and all these stocks, you have to have some kind of concept of what you're going to do. So, briefly, and we also don't want your secret sauce either, but what do you use to generate a trade idea? And it can be technical, fundamental, it can be implied volatility, those kinds of things, or something else. So let me start up top with John. At least it's up top to me. John, and we'll go around the board that way. So John, I'll let you go first, if that's okay.
It's hard to answer that question, but I like to look. Let's talk about bullish trades.
Yep.
When the market overall is bullish, I like to look for uptrending stocks. I like to look specifically at stocks that have decent fundamentals. Although the technicals are more important when it comes to swing trades that are, getting into a credit spread. I think the sweet spot for me is like a 30 days to expiration. I like to see decent premium. Let's say if it's a $5 spread, 20% of that. So I'd like to get $1 credit on a $5 spread. That to me is the sweet spot. If I'm doing it as an iron condor, maybe 25% of the spread would be the sweet spot. And you tend to get that using deltas in the mid-20s. So that, and it's working. In downtrends, I'm less important and less care about the fundamentals. In fact, I tend to look for stocks that are weaker within their industry groups. So that then it would be a fair call. Same issues.
Got it. Okay, good. Donna, let's turn to you now. What's your trade idea generator, would you say, just generally?
So I have a list of favorites that I go to and just watch to see how they're doing. And I generally set alarms or alerts as to when I'd like to get in a trade, if it's crossing a fib or it's crossing a couple of moving indexes, then I will generate the trade if it makes sense at that point. Recently, I have been more active on a charting platform called Wealth Charts and have been using some filters that they have to generate ideas.
Okay, great. That's from Wealth Charts from Rob, who was on earlier, I believe.
Yes.
Good. Santiago, what do you think about this, the trade idea generator? What do you like to have a look at?
So probably for the past year, my strategy has been extremely simple. I've been doing more automated trades using option alpha. And so I only trade SPY and I only trade iron butterflies. And so I set up a bot to just basically look at the shorter time frame trend of SPY and then place my iron butterfly in the direction of that trend. And that's it. And then I just let the bot take over the rest.
I love the bot. Wow. I need one of those. Sounds good. Okay, great, Santiago. Tim, what's your trade idea generator?
Well, I'm not a directional trader anymore. Primarily, I'm a mechanical trader, and Dick and I are a member of a trading group with Navigation Trading, and we generate mechanical, back-tested, probabilistic trade ideas back and forth. So I'm constantly looking at new ways to trade and new, ideas, but they all have to be based upon probabilities. As most people here are traders with options. There are certain probabilities built into options, so we can take advantage of those, especially if we're selling premium, selling credit spreads. So, but you have to know what you're doing, obviously, otherwise you get your head ripped off.
Yeah. Okay. Good. Thank you, Linda.
It's going to be very similar to what we've heard. So like John, I like to look at the big picture, the market direction first to decide, do I want to go bullish or bearish? And then Donna and I, we're very similar. I use Wealth Charts too. I love it. Rob has built some incredible tools there, his scanners there. I actually have some of Rob's tools that I use to help trigger trade, particularly my futures trading. So I like to go with the market, go with the trend, and then use those scanners to help find the stocks that are moving in the direction of the market.
Okay, great, thank you. And Dick?
Yeah, as Tim mentioned, a lot of back tested mechanical type of trades. That's probably 80 to 85% of what I do, and then I'm just real big on price and levels, fibs. Like San Diego, I probably have close to 50% of my trades automated now.
Okay.
So sitting back and watching, kind of in that phase of it now, but ultimately the goal is not to have the same amount of screen time that I do today. At least the mechanical part of it.
Right. Understood. Okay, great. Thanks for all that. That's awesome. So next question is going to be around, risk management, let's say. So I think we're all pretty keen, if we're active people in the market, that we have to have some mechanism for managing our risk. So what I'd love for you to comment on, if you can, is, how do you manage risk, first of all? Okay, that's number one. How do you size your trades? So what size do you append to these trades? And I know it's probably going to deal with how much money we have, but we want to hear a little bit about that. And how do you deal with the losses, right? Because as we all know who have been in this industry, you can't win every time, right? You're going to have losses. How do we deal with that stuff? So I hope that makes sense. Dick, if you don't mind, I'm going to snake back the other way. I'll start with you first. Is that okay?
Sure, absolutely.
Okay.
So if someone new that wants to get into trading and they ask, so what's your advice? If they have some basic knowledge of trading, you have to have your risk management in check, and you have to be disciplined about that. So for me, it's maybe 5 to 7, some circumstances, maybe 8%, as far as my total risk per trade.
Okay.
And that's on the downside. If I got a condor that blows up, or I'm long options, that would be the most that I'd want to have on the table.
And that was 8%, Dick? Sorry, that you said 8% per trade?
No, 5 to 8. Yeah,
I got
8 would be on the high side.
Okay, understood.
Yeah.
Okay, great.
And if I'm feeling, not that I trade on feelings, but if everything's setting up and it looks like you can press it, maybe I'll press it to 8, but never more than that.
Okay, got it.
Dealing with losses, I think it's part of the game. You have to get the emotion out of it as much as possible. You can't trade without. Well, I guess you could trade without taking losses. You probably wouldn't make any money. But you take a loss, you're that much closer to the next win, right? So
right.
At least if you're probability trading.
Right.
So I try to stay unemotional. Losses are going to happen. It's just part of the game, and you just have to take them in stride.
Okay.
You missed one other part. I'm sorry if I did.
No, I think you got them all. That's good. Thank you, Linda. Do you want to go next? So if you need me to recap what I was asked, I can do that.
Yeah, go ahead, Lex.
Yeah. So what we want to know a little bit about is, how do you manage risk? How do you deal with losses? And how do you size your trades? Those three kind of headings.
Yeah. So for me, I look at managing risk and sizing the trades. They're kind of, they go hand in hand together. I have a small account that I trade, and then I have larger accounts that I trade. So on the smaller account, obviously the trade size is going to be a larger percent, maybe 5 to 10% of the account balance. On the larger accounts, keep it down to no more than 2% per trade. Handling the losses, you have to let it go. For me, I have to let it go. I have to say, okay, that trade's behind me. Did I, when I go back and look at it, did I follow my rules? Was there a reason to get into the trade? Did I, like so many people do, hold on to my loser too long in the hope that it would turn around and come back? But ultimately, I have to let the losses go try and learn from it and move on. I was attending a webinar, and I actually heard someone say something that I really think makes sense. This trader said, you know, a lot of people look at their losers and they try and learn from them. He said, okay, that's fine, but isn't it better to look at your winners and learn from those and then repeat? So it's kind of, I really heard that message, and that means a lot to me. So I try and focus too on what was happening when my winning trades went through, so that I can repeat that, see that scenario again, and repeat that again.
Okay, great. Thanks. Tim, what do you think? Oh, Tim, you might be on mute. There you go.
There you go. Yep. I just had to grab my mouse. So I'm in the camp of pretty much about a 2% to 5% risk per trade.
Okay.
And I look at all my trades, my open positions combined for what my total risk is. And I try to make sure that's not more than about 7 or 8% if they're correlated. But I try not to have multiple positions on, to be honest with you. Most of the time I don't. And as far as the losses, you know, I've been through periods of drawdowns. I'm sure everybody here has, and they can be devastating on your trading psychology. So I've had to work on that. The last, I would say, a couple of years, I've really worked a lot on trading psychology. So and there's all kinds of resources and tools out there these days, and support from different groups. But you know, it's really, this is more important than the technical part of trading. Most new traders don't understand that. I didn't understand that when I was new. But handling losses and handling your trading psychology will keep you in the game for the long run. You know, if you learn how to do that. So, which is what you got to do to be successful. You got to be able to be in this for the long run. So, and not blow up your account. So, I don't want to talk too much about that. But anyways, hopefully that helps.
Yeah, thank you. Santiago, thoughts?
So since I am using a bot for the majority of my trades, the bot is managing the risk. So if an iron fly completely blew up, that's going to be about 8 to 10% of my account. However, my stop loss is set much lower than that. So, you know, that would be the worst case scenario. Handling losses, you know, like Tim said, it's something that you're going to have to experience as a trader, and that psychology of seeing that red in your account can sometimes affect you. But what I've done with at least my bots is I forward tested them several months, so I have an expected win rate. And so if I'm in my live trading going below that win rate, that's probably when it's going to start affecting me. But if I'm having a couple losers here and there, but it's not really affecting my overall win rate, then I'm fine with that risk, because that's sort of what I expected. Excuse me. The size of my trades, I'm only doing one at a time, one iron fly at a time with a bot. And once the account gets larger, then of course I'll scale that up. But as of right now, I just want to make sure that I can consistently get these winners. And then once my account reaches a certain size, I want to take that profit off. So if I do lose, then I already am enjoying my profits.
Okay. Terrific. Terrific. Okay, Donna, what are your thoughts on this, on the risk management part of it?
All right. Well, I'm also keeping it to about 2% of account size, but I have recently started doing more covered calls. And with that, I've gotten into some larger stocks. So those have a bigger chunk of my overall asset base. And I'm letting those run and continuing to do the covered calls as a strategy in that. For credit spreads, really trying to keep it to 2% and not more than that.
Okay.
And I have taken some big hits. I'm in the process of reanalyzing things because I have been hit, especially late August, September, with some huge gaps and total losses. So I'm digging out at the moment and reanalyzing what I'm going to be doing with those. There were a couple I probably could have reacted differently to, and I think that was an emotional response. I could have, you know, put an iron condor on as opposed to just taking the whole loss, but I didn't. So I'm I'm in the process of learning and
Great.
redoing my game plan.
Okay, understood. Thanks for that. John, any thoughts on this one?
Well, so for probability trades like credit spreads and island condors, my maximum allocation would be 5% of the account size, that being the margin hold, being no more than 5% of the account size. In the recent market, I've not been trading full allocations. With the volatility and the whipsaws going on, I've tended to use half of my maximum allocation until right, like maybe the last day or so, where it appears that we're in the Santa Claus rally. With the more directional trades, such as credit spreads or butterflies, it's going to be 2% of the account size would be my maximum allocation. Back to credit spreads and so forth. I never hold them. I should never say never, but I don't remember in the last 2 years at least holding a spread until expiration. I've learned that in that last time before expiration, the volatility can take a winning trade and kill it. So I tend to take advantage of the back testing that TD Ameritrade and others have done in that 50% of your maximum return on investment seems to be the sweet spot. So I tend to get out at about 50% of my max ROI. The exception being, there are some trades lately that have moved up huge really early. So if a spread gains 30% of its return within the first 3 days or so, I'm gone. I'm going to take that money and put it into a different trade. And I will be in multiple trades at one time, but never more than 50% of the account in the market at any given time.
Okay.
So, and then as far as handling losses, I mean, they just happen. I don't care. In fact, some losses I've been happy with. Just because the market does what it does, and it was a good trade, and there it is. I learned several years ago that mindset is sort of the belt on which all strategies rest, and that's the most important thing to me. Is so I don't worry too much about the losses; they just happen.
Okay, good. Thanks for that. So someone asked too, and we won't go around the board if you just shout it out, but I think I know the answer to this. But when you talk about percent of risk of your account, you're including just cash or the whole account, the stock value, the option value? I'm assuming it's the whole account value. Is that you measure that percent on that? Is that accurate?
For me, it is.
Right. It's the whole account value.
Yeah, got it. Okay, hope that answered that question. I would say this about the losses versus gains. I too experienced both sides of the equation, right? On the trading floor way back when. However, my happiness on the gains was about 10% of my sadness on the losses. So I couldn't get myself out of that mindset. So I was 10 times more sad on the losses, no matter how big the loss was compared to the gain, quite frankly. So it could have been a fraction, but that was just me. And I tell you, the trader community was very much similar to that. We just couldn't handle the goofiness of losses. They did happen though, right? So, all right. I think, time's running. We're gonna do one more. And the last one is going to be this. What do you think, if anything at all, and you might not have an answer here, is the industry missing in terms of tools or technology or things you'd love to see a platform have? What is that one thing, the magic little wand in the box that would make your lives much better? Now, Santiago, I'm going to start with you because you have a bot. So you're using a bot, and that's a lot of automation. So is there anything else out there in your mind that we're missing in this industry, the options industry at large?
I don't know if it's anything that could be changed at the, like a broker level or a tool, but one thing that I would love to see, and I think a lot of other traders would like to as well, is the removal of the pattern day trading rule for accounts under 25K.
I
think
love
that,
you already, by the
yeah,
way. Okay.
I think a lot of traders would really enjoy that. I think that's why some, are moving towards futures, because they don't have that rule. And with bot trading, you could do the scalping so much easier with all the different types of options strategies if we didn't have that PDT rule. So that would be one that would have my vote, definitely.
Perfect. Okay. Tim, I'll go to you next, if that's okay.
Sure. Yeah, a pattern day trading rule just never made sense to me. You can throw your money away in a casino, or certainly, with buying premium or buying, stocks or futures, and all day long, right?
Sure.
Anyways, enough with that. So I think the industry itself does pretty good with tools and technical. I mean, the technical component for trading is just, me, has gotten to be way too carried away. So believe me, this is from a guy who's very technically oriented, and I've gotten away from most of it. Like Marcus was doing, he was drawing boxes. I like that. Trading doesn't have to be that complicated. We think it does, but nothing back tests on technicals, hardly at all, if you ever want to back test technicals. But anyways, I went down that road. I don't do that anymore. So what I think would really help is the trading support like this, right? A group of traders that are successful. What are you doing to be successful? And then let me point out one other thing, which is transparency. There's so many educators out there hawking their wares, their tools, and selling, making money off of it. I could write books all day long and sell stuff like that.
Sure.
But am I really trading live, and I'm being successful? How am I being successful? How am I dealing with all the issues that we're just talking about here? And that kind of support does not typically come from your broker. So you got to go find it somewhere else. And it's very tricky to find it somewhere else, because a lot of people are out there touting that they're experts when they're really not. They're really selling stuff. That's all I got. Thank you.
Okay, Tim, thanks. Let's go, Dick. Let's go to you next, if that's all right. Sure.
I guess maybe even 3-4 months ago, it would be all about automation. But since I found a service that I'm getting comfortable with, I'm very excited about the automation, and I'd say it's probably about 80% there, at least with the SPX. I know San Diego, Option Alpha has been trading the SPY for some time now, but automation with the SPX, it's, like I said, phenomenal, but I think it can go a little bit further.
Yeah. Okay, good.
On top of the pattern day trading rule, that's ridiculous.
Understood. John?
Well, I don't have a whole lot to add to what's already been said. I used to be concerned about the day trading rule. That's no longer affecting me personally. And although I've done some day trading, I'm not very good at day trading, so I tend to be more of a swing trader. But it does happen every now and then. I don't have a whole lot that I can think of that I would want things to change, other than maybe myself learning a little bit more about the options for automating. That's it.
Okay, good. And ladies, we're leaving you guys for last. Donna, why don't we start with you? Anything that you're craving out there that would help your trading?
No, other than the day trading rule. Okay. There's been times I've stuck in a trade because I was afraid of getting flagged. So
the darn day trading thing, I know. Okay, Linda, any thoughts on this beyond the pattern day trading?
Nope, I like Tim's idea too of having a group of traders to talk to and learn from. Definitely second the day trading rule.
All right. Well, I guess I got to send the letter over to FINRA SEC on this thing, right? Darn. Well, Well, listen, this was really fun. Our time's up. It was great to meet you. You guys did an awesome job. I really enjoyed this panel. This was fantastic. I'd love to see and hear your thoughts for people who are actually doing this. This is fantastic. So really, thank you for coming on. I appreciate it. I hope it wasn't too hard.
That was great.
I'll look forward to doing one of these with you. So, all right. I think we're going to take a break now, but thanks everybody. Good job.
Thank you.
Thank you.
All right.
Thank
Bye
you.
now.